Hi everyone, welcome back to the channel. In this video, I want to talk about an opportunity in the stock market that could bring you 3x returns just in a couple of months. And this is a pretty unique opportunity in the stock market that I haven't seen anyone else on YouTube talk about. So stay tuned if you want to get the full picture of this stock and why I think there's potential for 300% returns in just a couple of months. So this is an opportunity that was created from the merger of Bristol Myers Squibb and Celgene, and these trade under BMY.RT. So the Bristol Myers Squibb CVR was the result of the merger between Bristol Myers and Celgene back in 2019, and as a result of that merger, we saw a spinoff of the CVR, which is the Contingent Value Right. And this is one of those special situation investments where the CVR isn't a normal everyday thing that's traded on the stock market. It usually only arises in these merger situations and mostly with biotech companies. So what the CVR is a contingent value right that is worth a certain value if a number of conditions are met. And in the case of the Bristol Myers Squibb CVR, this value right will be worth $9 if these conditions are met. So when the CVR was created, there were currently 3 drugs that Bristol Myers was trying to get approved by the FDA. And the terms of the CVR is if all 3 of those drugs are approved by the first quarter of next year, then the CVR would be worth $9, and otherwise it would be worth $0. All right, so this contingent value right, the only thing that determines the value of it is the progress of these drugs for FDA approval, right? It doesn't matter anything else in the stock market. Bristol Myers stock could drop by 50% and the contingent value rights may not drop at all, and they would actually go up if there is being progress made on these FDA approvals. When all is said and done, the rights will be worth either $9 or $0. There's no in between, where this acts like sort of a binary option where it's either all or nothing. Either all 3 drugs get approved by the FDA and the rights are worth $9, or at least one of the drugs doesn't get approved by the FDA by the first quarter of next year, and then the rights would be worth 0. Okay, so that's something to keep in mind, that there is a lot of risk with this play. It is by no means a risk-free investment. And so the first drug was ozanimod, and this was approved in March of this year. So that is a good news for this rights offering. So the first drug out of 3 was already approved by the FDA back at the beginning of this year, right? So that is good news for the rights offering, and the rights offering is priced accordingly. Right now, they're trading at just about $3, so about 1/3 of the full value of the rights offering, right? The 1 out of 3 drugs has been approved so far, and therefore the rights are trading at 1/3 of their value. Now, there's a number of signs that point to this having a high probability of being worth at least, more than it is now at the $3. Right, the first thing I always like to look at in these special situations is who owns the stock, right? Who is owning this rights offering? And in this case, it's actually the Bristol Myers employees who are working on these drugs that have to be approved by the FDA, right? The lyso cell and the ID cell. These employees that are working on these drugs are actually the employees who own a large number of these rights offering. And of course, Bristol Myers isn't going to, purposefully delay potentially life-saving drugs just to save some money, right? Obviously, they're going to put it through or they're going to face massive lawsuit risk, right? And there's a couple of reasons that this rights offering is currently mispriced. These are ideas from someone like Joel Greenblatt, who wrote the book, You Can Be a Stock Market Genius. In that book, he talks about a lot of these special situation investments and why there are some fantastic opportunities for high returns, right? If you look for uncommon situations in the stock market that have a reason to be underpriced. So the first thing with this is that the liquidity probably isn't going to be there for large funds. Now, there still is around 10 million shares traded daily. So for you and me, the average retail investor, this is going to be plenty of liquidity to get in and out of this position with no problem. But for a $100 billion fund, they're probably not going to be able to get into the CVR. And the second thing is that most funds aren't allowed to invest in something like a CVR. Most funds have it set in stone. They have these risk measures in place that say you can't really invest in any of these special situations because there is an opportunity for high risk. And so while that may be true, that takes out a ton of potential investors out of the equation, especially large funds that are the main movers of these types of stocks, because the rules of the fund are that they can't invest in something like a contingent value right. Now, there has been some potential risk for these last 2 drugs being approved by the FDA with the whole pandemic situation. Right, there has been some delays in the FDA getting out to Bristol Myers to be able to inspect the drugs, and there was actually a refuse to file letter for the last drug that would be approved by the end of the first quarter 2021. And even though this makes the deadline tight for that drug, the date is still March 27, 2021, so that gives them a few days breathing room before this deadline. And now, so there is some more news of the second drug potentially being approved by the FDA, where just around last week, there was someone on Twitter, Sheep of Wall Street, who posted pictures of allegedly FDA plant inspectors at the Bristol Meyers Squibb factory. And this tweet was later deleted, but from what I've seen, it seems pretty likely that, that this information is legit and that there actually was FDA inspectors at the Bristol Myers plant. So because of that, that makes me more confident that the second drug is currently on track to be approved by its deadline, which is around the end of this year. All right, and so like I said, there's 2 more drugs to be approved before these rights would be worth the full $9. And so the first drug was already approved. The second one has a high chance of going through. If you take a look at what point they are in the approval process, right, once a drug is at this stage, it has around an 88% chance of being approved. And so really the largest amount of uncertainty is with that last drug to be approved from the FDA. So Bristol Myers received a refusal to file letter from the agency. It cited the need for additional information in chemistry, manufacturing, and control. And so the thing is, even though on March 31st, 2021, the rights will be worth either $9 or $0, in between that, the stock can move, it can move like a normal stock, right? Based on investor expectations, the rights value can move up and down. And so even though maybe the rights won't be worth $9, in the meantime, I still think there is a good chance for appreciation in these rights before the end of this year, right? So in this article, the author said that if you take those expected probabilities of approval, the value of this contingent value right should be around $7.29. And so we can take a look at these Bristol Myers Squibb rights offerings right now. They trade under BMY.RT, and we can take a look right now. They're trading at just about $3 for each right. And if we take a look at the history of what this has been doing, they hit a peak of around $4.50 back in May of this year, and ever since then they've really been on a downtrend. Back in September they hit a low of under $2. And so this just shows that the current investors aren't very optimistic about the approval of these last 2 drugs, even though the odds seem fairly high that at least the second drug will be approved, and there probably is a decent chance of the third one being approved too. So I currently think that these rights are undervalued based on the probability of the last 2 drugs being approved by the FDA. I wouldn't be surprised at all if we see these rights offerings move towards $6 by in the next few months, especially by the end of the year. And if we see news of the second drug being approved by the FDA and any announcements on the progress of the third, I think it's very likely to see these rights offerings go to $7 or even $8 per share as investors begin to expect the full value of these rights being realized. So of course, don't just buy these because you watch this video. You have to do your own research, and nothing in this video should be taken as financial advice. And in terms of what I'm doing, I haven't bought any of these yet, but I am thinking about it. I'm still looking into this situation where I want to learn a little more about the FDA approval process, because that's something I don't really know much about. So I'm in the process of looking into that and seeing, at what point these drugs are at now in the approval process, and trying to get a good understanding of the probability that they'll ultimately end up being approved by their deadlines. And in that event, I would probably take, a small position in this. Again, there is still a lot of risk because by next year, there's only 2 outcomes. The rights are worth $9 or worth $0. So even if you bought the rights now and they go up to $6 or $7, and then we get news that the third drug isn't going to be approved in time, then the rights would instantly drop all the way down to $0. So that is also something to keep in mind. There is a large risk with these, but all in all, I do see somewhat of an asymmetrical risk to reward, where if you invested in these right now and they were eventually worth the full $9, you would get 3 times your initial investment with the risk of a 100% loss. So that's why if I ended up buying into these, I would keep my position size small, so I'd be able to take the loss if these rights did end up being worth $0. So that's it for this video. I just want to share with you this interesting opportunity in the stock market that isn't correlated at all to how the stock market does, right? We could see a huge stock market crash, and as long as the FDA approval process is still going where it's supposed to be going, these rights should go up in value. So let me know what you think about this opportunity, and if this is something you're going to look into more. If you found something of value from this video, hit the like button to help YouTube push this out to more viewers. And if this is your first time watching one of my videos, subscribe right now, hit the bell icon to get notified whenever I upload a new video. So that's it for now, and I'll see you next time.